What's up everyone, Dylan here. I wanted to hop on for another episode of the short and sweet analysis video. So with that said, we'll hop right into it. Coming into today, a lot of people were bearish, fearful, right? There was a lot of panic in the market based on what happened to the S&P and the NASDAQ on the reopen last night. And then what was happening in the cryptocurrency market, right? Ethereum was down 35% in just a few days. Crypto was crashing, right? There's a lot of fear in the market, okay? The VIX had opened up higher, right? So coming into today, right, a lot of people were very, had clouded judgment based on that fear, okay? Coming into the market, I outlined 3 different things this morning that the bulls still had going for them. So in this video, I'm going to start out by mentioning those, and then we'll get into current price action. Okay, so coming into today, I assessed what happened overnight, right? The different price action, and I did what all of you should, is take a step back and look at the macro view, right? If any one of you guys totally focused on intraday, very low time frames such as 1 minute, 3 minute, 5 minute, right? And you don't look at the overall picture, you're much more vulnerable to your emotions escalating on, a sharp drop on news, right? What we've been seeing recently, these Trump tape bombs, right? These headlines that have been coming out of nowhere and moving the market in a very volatile manner. Okay, so it's very important to take a step back, look at the overall picture to, get some context so that you can kind of have a line in the sand to lean on. Okay, so what are these pieces of context that I was referring to? First off, the NASDAQ never took out last week's low. So last Monday, the NASDAQ had dropped a crazy amount based on the DeepSeek news, right? However, you can notice that the last 2 weeks have made higher lows, right? So we had the week of January 13th, right? And then last week, the 27th, never took out the 13th low, okay? And then today, again, despite the large gap down today, right, or overnight, it never took out last week's low, okay? So that was one thing that the bulls had on their side, okay? On top of that, you also had the VIX failing to break above last week's high, okay? So not only last week's high, but the week of the January 13th candle as well. So you could see, despite the S&P breaching below last Monday's low, right? Last Monday's low, the S&P broke below. That should have caused the VIX to break above that same reference date's high. However, it never took out last week's high, okay? What does that imply? That implies that unless the VIX takes out the previous week's high, right, that the selling pressure will be short-lived below the previous week's low on the S&P, okay? So that was 2 different pieces of context backing up the argument that the bulls still had some skin in the game and still, had some control, right? So the S&P or the NASDAQ above the previous week's low, and then the VIX never taking out last week's high. Third, this is the third and in my opinion the most important piece of context that the bulls had on their side. Okay, to preface, I wanted to read something from Tom Essay, who's a market analyst, right? He said, the bond market has always been considered the smart market because there is almost no retail trader and investor interest, as corporate and government bond volumes are dominated by seasoned institutional investors with vast research teams and analytical resources at their disposal. Because liquidity in the bond markets is historically much lower than the stock market, it's much more difficult to get in and out of bond holdings relative to stocks. Okay, bond traders are required to make decisions with strong conviction, focused both on the macroeconomic backdrop, including policy rates, inflation trends, and growth prospects. Okay, so right, he's basically saying that the bond market usually is able to kind of show the overall health of a market. Okay, and what I'm getting into is this, right? Today, the bonds opened and closed green. Okay, in other words, yields opened and closed red. Okay, so the fact that the bond market not only opened but also was able to sustain those gains heading into today basically, goes against what a lot of people were fearful of, right? People were saying that these tariff policies were going to be very, very inflationary because those import tariffs were going to get passed down to the consumer, and that, right, they were saying that energy was going to, rise in price. They were saying that, goods were going to rise in price, and in the grand scheme of things, that inflation was going to be upticking. Okay, so my question is, why did bonds not only open green but sustain value, right? So the bond market was not pricing in higher inflation. So when you match that context with the fact that the Nasdaq never broke last week's low and the VIX was showing that the S&P was probably going to be that selling pressure was going to be very, very short-lived below last week's low, right? That tells me that, hey, these bulls still have a chance to really, get back some of the losses that were suffered over the weekend. Okay, so I'm going to show you guys that post just for transparency, right? It was 9:24 a.m. Eastern time today before the market opened, right? So that to me was very, very, very important to note heading into today so that I wasn't one-sided, right, in terms of only thinking, oh, this is very, very bearish, the market is going to crash to the downside, right? I did not have that mentality because of those three pieces of context that were telling me that, hey, chances are this dip is probably going to get bought because of those pieces of context, mainly that the bond market was not pricing in higher inflation. And like I said, that was one of the main reasons as to why people were fearful heading into today. So if you take out that threat, that basically takes out the idea as to why the market was down in the first place, in theory, right? You can argue that. So that was very, very important to watch, okay? So going forward, I outlined the gap fills, and late in the day, after the market closed, the S&P and the Nasdaq had both managed to close those gaps. Okay, and the reason I point out those gap fills is because last week's gap fills were very, very important from the DeepSeek catalyst. Okay, so I want to show you guys what happened when the S&P and the Nasdaq filled last week's gap. So let's look at the S&P, for example. So if you take last week's gap fill, right? Some people use the low of the range. Other people will use where the market basically closed, right? Whatever floats your boat, right? Whether you want to use the closing point or the low, it doesn't matter, right? Right. Regardless, the S&P closed that gap from last week. Okay, so how far did S&P get above that gap fill before it topped out? Got about 25 handles from the low gap fill, and then call it about 15 handles if you wanted to use the closing point gap. So basically what I'm saying is, will that history repeat itself, right? So what I want to do is now mark that same measured move using this new gap fill. So let's use 25 points, for example. So 25 points, all right, above 25 points using this gap fill would be, what is that? Would come out to about 6,083. So if history wants to repeat itself, right, that would imply that the S&P would ultimately come up to that 6,083 mark and then kind of, tip over and start fading to the downside, right? If this were to replay itself. So it's worth noting, right? Only because that last time that it happened is such a fresh idea. So it's like I said, it's worth noting for this time around. Okay, so now that the S&P and the Nasdaq both filled those gaps, that would be the next area of interest to look at, in my opinion. And you could do the same with the Nasdaq. On the other hand, okay, so those are important to the upside. Okay, and clearly I would want to look at Friday's highs on the S&P and the Nasdaq as well going forward to gauge upside. Sentiment, relative strength and weakness. Okay. On the flip side, okay, if the S&P and the Nasdaq do happen to roll over from any tape bombs that occur this week, where would I look at going forward? So we're going to talk about that right now. Okay, I'm going to get rid of these upside moves, right? Okay, so to the downside, the next level that I would look at, just in case today's low were to get breached, the next level down would be right here, right? I would use the low from August, right? I'm going to use that low and attach it to the low from January 13th, okay? So this would be the next level down, in my opinion, on the S&P if it were to breach today's lows, which occurred at 59.35. So if 59.35 breaches, I would expect that the next move down would hit this general trend line. Okay. On the flip side, for Nasdaq, it also has a very, very important downside area. Okay. To start off, it has this line right here. It has two trend lines that also line up with a very, very important moving average as well. Okay, so I'm going to take the August low and attach it to last week's low. And then you take the low from October 1st, which latches onto the lows from early November, and then again January 13th and last week's low. So that this level that stems from October 1st has been tested numerous times and continues to hold. Okay, so this general area between those two trend lines also aligns with the 100-day moving average on the cash. Okay, so if we look at the cash, which is US 100 on TradingView, you could see the 100-day moving average has held up very, very well. That basically marked last week's Monday's low. Okay, and today it got very, very close. It did not hit today, but it got very, very close. Basically, what I'm saying is that 100-day moving average aligns with those two pieces of trend line that I just highlighted. So in the very, very near term, that general area between, say, 20,910 and 20,840 is going to be very, very, very important, as it coincides with three different pieces of support. Okay, the bulls really, really, really want to step in and defend that general area. Okay, and ultimately, if none of these areas, defend themselves, and the bears continue to slice through these areas of potential support like butter, my macro line in the sand on the S&P is this 5,800 area. That has been a very, very, very important pivotal area since August. Okay, since late August, you could see numerous different pieces of evidence that support, that this was very, very strong resistance and then turned into very, very strong support. Okay, so if this trend line were to breach, if the 100-day moving average on NASDAQ cash were to breach, if the trend lines were to breach, right, this 5,800 area on the S&P futures is very, very, very important. And that's like the very, very, very macro line in the sand, okay? So those are the areas that I would look at going forward to the upside. You have basically Friday's high, which lines up with this trend line. You also have that S&P measured move line as well, to the upside, and then to the downside you have this cluster of levels on the Nasdaq and S&P trend line, and that is literally what I would be looking at. In terms of individual stocks, Nvidia closed at a very, very, very dicey point. I wouldn't say the bears are in control just yet, as Nvidia is now, it's been flirting with that general area. But basically what I'm saying is that, and I showed this to you guys last week's video. Yeah, last week bounced right at that area on Tuesday. It lined up with 116.25. Okay, so today's open gapped below this trend line that has been holding very, very well since February. Okay, basically the last year it's been holding. Okay, so it has retested this general area. You could see it gapped below, right? It opened up below, and then it came up, retested that general area, and kind of faded back below. But it's still, flirting with that general area and sustaining well better than I had expected it to. So essentially what I'm saying is that it's very, very important for the bulls to continue to sustain value. If it opens up tomorrow above that trend line, it'll be very, very important for the bulls to sustain value above, right? If they lose that support and start to really tip over, it can put in an additional stress on the overall market. Okay, so that is what I would look at going forward. If you guys have any questions, let me know. I appreciate the support, and I will talk to you guys soon. Peace.